Well, as we were saying, while the markets is still about a 0.25% point higher, Nifty Bank the last 4 or 5 days has almost been absent, conspicuous with its absence in major activity. This week at least, when the rally has been fairly buoyant. So let's wait and watch if it participates or no. But one is the participation within of specific pockets. Two is how has the start of this earnings season been already? What are the expectations thereof? More importantly, what the texture of the market is looking like amongst institutional investors as well. Somebody who talks to a lot of them very, very closely is Nirav Sheth. He's head of institutional equities at SBICap Securities, joins us right now on the show. Nirav, before we talk about all of that, just a basic view from you of how are you seeing the texture of the market currently? I mean, we all know about the divergence between the performance in the large caps and the concentrated 5 or 10 versus the others. Probably extends to select mid caps as well. Do you see this continuing? Because while we may be sitting at new highs, portfolios are bleeding.
Yeah. So my view is that it's a boring answer, and I think the markets will be very, very boring in the current year, in a sense that if you look at even the earnings play out over the next year and a year after that, and if I look at the current valuations, then I don't think that you got any significant upside. So the latest piece that we put out, we are looking at a 6% upside from the current levels. And I'm giving a reasonably decent median PE multiple of 16 times on March 20 earnings. Wow. Importantly, you don't get a good case for even having a downside. So I think you're going to be in an extremely narrow range, and what is probably going to happen is that you're going to see big churn. So, and I've been debating this for a while, I've been arguing this for a while, that the have-nots are going to perform. So I think your that's the call that I've got. So I still find it extremely surprising that IndusInd Bank is almost in absolute market cap equal to an Axis Bank and stuff like that. So I think that will change. Now what the markets will do will largely be determined by what Axis Bank does, ICICI Bank does, SBI does, and what a Kotak does. If Kotak holds up to its level, then we are going to move higher. And if these banks move up and the other banks start going down, the markets are going to remain flat. But I think that is broadly the structure of the market. So if you look at the difference between, like you said, if you look at the difference between the Nifty and the equally weighted Nifty performance, the divergence is 11%.
Interesting. What do you mean by that?
So in a sense that it's basically the large caps which are driving. So Reliance is driving large part of the Nifty gains, something like that. So it's not a very healthy participation in the market. So very few stocks are driving that.
Yeah.
Which has been a global trend. So they talk about the FANG and something like that. Absolutely.
Yeah. The question though, Nirav, would be that, as you said, it's global in nature. For the last so many years now, we haven't seen the ABBs, Gs on a global level. The market caps move up at all, right? It's been very, very specific names. So the new age companies, consumer-facing companies are doing really well. The industrials, even if they are age-old leaders, are not doing the same.
Sure.
Are we likely to see that happening in our markets too? The Bajaj Finances, HDFCs, HDFC banks of the world, maybe a Reliance of the old economy is doing well. Some of the others are not. Does that divergence stay?
I'm not very sure. So I'm saying is that when you look at, especially if you look at developed countries and if you look at something like FANG, we are talking about a structural change wherein they are getting a larger part of the profit pie, right? A large part of these earnings is explained by a very high profit to GDP ratio, right? So there is something different. So in US, you got profit to GDP ratio, which is I think close to 9 or 10%. The long-term average is 7% because they are getting a larger part of the profit pie, not only within the domestic shows, but also from abroad. Google does about $1 billion turnover a year. That means that a Z or someone else is losing that pie. In India, very strangely, you got profit ratios which are close to all-time lows. I think we're at about 3.6 or 3.7% against a median of about 7%. So in our case, it is a lack of earnings coming back. There it's about great companies doing very well, and others are also running. So I think that we are likely to see that catch up happening. I am very positive. So you're looking at 6% earnings CAGR in Nifty over the last 4 years, which explains this bipolarity in terms of what does well, what doesn't do well. So it doesn't pain me not to own an Axis Bank. It doesn't pain me not to own an ICICI Bank. And therefore, Bajaj Finance will be worth more than Axis Bank, right? And you've got a 5 times gap in net worth. It has to change.
So I'm going to take your point on board. The rally that we've seen for Nifty is largely being polarized, and the kind of surge that we've seen in FANG stocks globally, do you think back home in India there was a lack of opportunity then, and hence the reason why more money was moving towards IT, or there's a genuine recovery that one is witnessing in growth levels, earning levels?
So I think that you are likely to see recovery happening forward. I'm still not convinced that you are seeing a broad-based recovery. The reason is that to me there are two strong leading indicators. One thing is credit growth, right? Which is you moved off the bottom, but you are just in 11-12% range. You cannot have an economy firing till you are growing at about 18, 20, 22%, which is what previous historic cycles would give you some indication. Second thing is profit growth. So now I'm very hopeful that earnings will grow at about 23% is what we are expecting, right? That is the first leading indicator. I mean, appreciate the fact that you get excited about things, your animal spirits come back when I got profits, right? So if I'm looking at last 3 or 4 years and if I'm running as CEO of the company, I cannot get very excited about investments, stuff like that if I don't have profits backing me up.
Correct.
So I think we look at many things, but the critical leading indicators will be credit growth, will be profit growth. And both of them have lagged. I think that needs to get corrected, and hopefully I think FY19 should be the initial block, but I still believe a full-fledged recovery is probably FY20.
So then if you're betting on the credit growth, would you also bet on the banking stocks then?
Banking stock is to me the most obvious place to be for the next 2, 3, 5 years. Not only because the growth is going to come back, but like I've always mentioned that India's story is about massification of credit. It is about, so you had all these guys, only 40-45 million people getting access to credit, and that is changing in terms of, the road stalls, restaurants, all these guys are being a part of the mainstream credit. That is going to drive credit. That is going to drive growth. So you have somewhere over there.
Where would you put your money, private or PSU? I know the answer because most of them are saying private.
I know the answer too. Can I answer for Nirav?
Absolutely. So I mean, my view is that the beauty about banks is that if you've got a sensible CEO with head on the shoulders, everyone will make money. You got an AU Financial making money, Equitas making money, Yes Bank, SDFC Bank, Bandhan Bank. Irrespective of size of the balance sheet, you got ROEs which are in the region of 16 or 18%. So it is not something that requires huge amount of skill. It's a modular structure. So yeah, you can pick and choose. You'll run short of money, not of ideas.
Very interesting. I somehow get a feeling that for a lot of these guys like HDFC banks and the others, where the asset quality was never a problem, the management was able to focus on growing business in innovative ways to compete with what is arguably going to be a global war, right? I mean, what happens when Alipay comes in, etc., etc.
Absolutely.
But the PSUs are saddled with trying to solve the worms in their own backyard. That customer acquisition and customer servicing somehow just takes a bit of a backseat. I don't know when does it come back. Anyways, the other pocket, Nirav, that has puzzled me, to be honest, is that with this whole conversation of MSP price increases, almost every fund manager that I speak to, they obviously don't comment on stocks, but they speak about how they want to bet on companies which will benefit from the rural spend. Now, the trend, if at all, is that almost everybody is betting on consumer names which will benefit out of this. So the select rural auto spend focused companies, etc., come into play. The pure play agri related stocks, I mean, UPL has, for maybe specific reasons, been in turmoil. The seed companies, the pesticide companies have all been beaten down black and blue, or at least they haven't given any positive returns. What's ailing that space?
Precisely, which is why I'm saying that I don't see a broad-based recovery. So I mean, if you just look at the latest IIP numbers, look at the PIMA numbers, you got 2 months of growth and then 1 month of contraction in services, right? Which is unusual. Which is what I'm saying is that it's not that you are firing. I am not of the belief that you are seeing a great broad-based rural recovery, because the rural wages are still in about 5% range. And if I adjust for the inflation, therefore they are in negative territory. And when you last talked about the great rural recovery, they are growing in double digits, which is what led to inflation and stuff like that. So it is not something that gets me very excited. My conspiracy theory is that a lot of these companies, like consumer companies, a lot of them made tons of money by retaining a part of the GST gains that they've got. And the narrative that they want to pass on is the fact that there is a decent amount of rural recovery happening. So I think it's in some pockets.
Nirav, right? Because we saw demonetization in
that
the
also
GST.
plays.
The numbers were looking good because of low base.
Absolutely. But I think their margins have also expanded, and maybe I don't have a great answer to it. So I speak to some of the companies. Some of the companies are saying that there is amount of pickup that is happening. But I mean, somewhere it has to add up, right? If I look at some macroeconomic statistics, it is to reflect somewhere, or else it is just a narrative, and it could be very company-specific thing. Someone is launching a new model, a new product, and that tends to do well. You get bullish on Maruti because Maruti gets products right, not because you're very excited about what is happening in the car industry. It's going at 12%. something like that. So it could be company-specific issues as well.
So you're not betting on the rural theme at all?
No, I'm not. I'm not.
It's good to get contra views, Neeraj, because
Yeah, always good.
yeah, we've been seeing a lot of market participants betting, and not only them actually. I think the commentary from HUL in the last 3 quarters has been we are seeing rural recovery. It's not back to what it was, pre-demonetization level. So let's see whether that plays out or not.
There is some element. I'm not saying is that.
No, but you rightly mentioned it has to be a double-digit
so
growth.
we've seen Mahindra doing well with their rural pickups, but that was after 4 years of almost a degrowth. So off some low base, you're seeing some sort of bump up that is happening. But like I said, it becomes very apparent for a broad base of companies if you are talking about a real economy. Secondly, just look at the last CPI reading yesterday, right? The inflation surprised on the upside. Why? Because of food inflation, which is still 3%. That is basically my farm incomes, right? So then what is the disconnect?
True. Okay. One factor, Nirav, and you have telling thoughts on this. By the way, just before we continue that conversation, want to mark, a couple of things. Bharti Infratel is now down 4%, by the way, viewers, so keep that at the back of your mind. And surprise, surprise, while HCL Tech may be doing what it is doing, the rest of the IT pack seems to have bounced back. Wipro is up a strong 3.5%. I guess once TCS announces, or the first company announces a buyback, the belief is that everybody else will follow suit. HCL Tech has already done that. I don't know if it's that or something else, but Wipro is certainly revving up. The last few days, it's been one of the better performers. We already spoke to you about IT, Nirav. Crude. You have a telling view there. There's a bit of a pullback, temporary as it may be, because Iran sanctions moving out or coming in rather might well put some bit of a lid on the downside for crude too. What happens to the crude sensitives? OMCs, if you have a view there, and something that I almost ask you every single time, aviation.
Right. So I think from the last time that we spoke to right now, I think our hypothesis was that your upside in oil should be kept, which I think is broadly playing out. And the worldview then was the fact that you got midterm elections coming in November, and then Mr. Trump likes to go and say that he's in charge of oil, and he tweets that, I've spoken to Saudi Arabia and they could increase the spare capacity and stuff like that. So it seems that oil is likely picked at least till you are there into up to November or something like that, and they have increased, they cut the production quotas and stuff like that. 2 things. First of all, in terms of the impact of oil on the broader macro. Inflation is YOY, not absolute level of oil, and we have already taken a big part of the increase so far. So last part of that gets reflected in my inflation. So there is no suppression of inflation because of oil prices. So we are done with that largely, and you are going to see softer numbers going forward. And if that is the case, then look at something like HPCL. You got normalized marketing margins today. So you have priced your petrol and diesel to an extent of $77, while the Brent is today about $74. So they are now getting back, they're already in a territory of normalized marketing margins, and your stock prices are down 45% from the top, right? So that you've got a bigger play over here, right? So when I speak to some of the clients, most of the clients, there is a big resistance to us getting into PSUs. You pick up any chart of any PSUs, Bharat Electronics, banks, OMCs, they've all fallen off the cliff, right? So money is just tend to move out of it, and because you're getting into political heavy calendar year and stuff like that. And therefore, I'm not sure in terms of how fast the sentiment can come back, but I'll be very surprised that year out, you're not going to make some serious money in these kind of stocks, which is what happens, which is what exactly happened in IT, that, nothing happened and, done, dusted, and suddenly the stocks, TCS is up some, 25-30%, talking about serious amount of wealth being created. I'm talking about large cap heavyweight.
Yeah.
Likewise in aviation, traffic growth is held up. So some of the companies, the yields are holding up in terms of YOY, and the story remains good. But obviously, if the oil is likely to go down another $5, then the stocks will just fly. But I can't take a call on that. But even from here, current levels, you should get far more than your required rate of return in these stocks.
Let's hope for that. Nirav Sheth, always a pleasure having you. Thank you so much for taking the time out and being with us today on Bloomberg Quint. Really appreciate your time.
Sure.